Welcome to HAVE.crypto's YouTube channel, where you can find and learn everything about crypto markets and trading. In today's lesson, we will start with the terminology. So, take a comfortable seat and let's get started. Crypto exchange. A crypto exchange is a platform on which you can buy and sell cryptocurrency. You can use exchanges to trade one crypto for another, converting Bitcoin to Litecoin, for example, or to buy crypto using regular currency, like the US dollar. Exchanges reflect current market prices of the cryptocurrencies they offer. You can also convert cryptocurrencies back into the US dollar or another currency on an exchange to leave as cash within your account if you want to trade back into crypto later, or withdraw to your regular bank account. For us, the best exchange for spot trading is Binance. For leverage trading, we recommend Bybit or Femex. Below the video, you can find more info about the exchanges and links with bonuses. Leverage and margin. To put it simply, leverage is the use of debt, borrowed capital, for your own business. For example, if you buy $5,000 of Bitcoin with a capital of $1,000, you have used a leverage of 5x. But leverage is also a double-edged sword. While your investment is augmented, so is your risk. The use of leverage can be satisfying if the market moves as expected, but the reverse is also true if it doesn't. What about margin? Well, margin is the amount of funds required to open a leveraged trade. If you want to open a position of $1,000 with 5x leverage, your margin requirement would be $200. Market or limit order. Really depends on the situation, but let's dive into the differences. Market order is an order to buy, long, or sell, short, crypto at the current price level. It is executed immediately. As long as there are willing sellers and buyers, market orders are filled. With a limit order, buy or sell crypto at a specific price level or better. A buy limit order can only be executed at the limit price or lower, and a sell limit order can only be executed at the limit price or higher. A limit order is not guaranteed to execute, but this is what we recommend using. Set a plan, mark your entry level, and go with a limit order. Use stop loss and avoid liquidation. Well, nobody wants to be liquidated, so we use stop loss in every trade. That's simply an order which is triggered when the price goes below or above this point. Depends if you have gone long or short. It is used to cut losses, and we highly recommend you always set a stop loss in your trades. For example, setting a stop loss order for 10% below above your entry will limit your loss to 10%. The other option is liquidation. It happens when you are stopped out of your leverage position because the trade went in the opposite direction and your margins are not big enough to carry the trade anymore. Support and resistance. The concepts of trading support and resistance levels are undoubtedly two of the most highly discussed attributes of technical analysis. Part of analyzing chart patterns, these terms are used by traders to refer to price levels on charts that tend to act as barriers, preventing the price of an asset from getting pushed in a certain direction. Support is a price level where a downtrend can be expected to pause due to a concentration of demand or buying interest. As the price of assets or securities drops, demand for the shares increases, thus forming the support line. Meanwhile, resistance zones arise due to selling interest when prices have increased. Both zones are defined by multiple factors such as Fibonacci levels, trend lines, volume, etc. Before moving to the last bunch of crypto terminology, make sure to like the video, subscribe to our channel, and click on the notification bell. It's free. Now, let's go through some of the most important abbreviations in crypto that you can face in Twitter, YouTube, or other media platforms. FOMO, fear of missing out. Social anxiety stemming from the belief that others might be making good profits while you are not. Don't do this. There are tons of trading opportunities to come. FUD, fear, uncertainty, and doubt. A propaganda strategy to influence perception by disseminating negative or false information. It's very common when we see a dump, all media to start recalling old fake news, spreading fear around the market. HODL. In crypto, HODL comes from a drunken misspelling of the word hold. Years ago, An enthusiastic Bitcoin Talk forum user by the name of Game Kyubi posted a semi-intelligible tirade, after a few drinks, about an unfortunate trading decision he made during a volatile price rally in December 2013. In his post, he wrote, "I am hodling." And within hours, every Bitcoin community channel started making memes and GIFs, catapulting hodling into the crypto history. Thank you for watching our video. Next time, we will continue digging into trading basics and we will discuss market cycles and trader psychology. Also, don't forget to check out HAVE.crypto.io and try our trading indicator. Subscribe and don't miss this opportunity.